Is the housing market crashing or is it simply correcting? Are we going to see a sudden surplus in housing inventory and a huge crash in prices, which would cause everything to explode? Is this the housing crash we've all been waiting for? Well, today we're going to talk about what the experts have to say and what they think is going to predict to happen for the rest of this year. Hey, I'm Tristan Campanella. I'm a San Diego top producing realtor. And listen, guys, I make these videos for you to keep you informed about the housing market, which impacts all of us in one way or the other. My hope is for you to be informed when making your decisions. And as always, guys, people call and text me off YouTube all the time, and I love it. Please reach out anytime. I'm so happy to take the time to answer your questions. So let's get into this. This is the number one thing I think people are worried about is, has the housing market heading for a crash? Well, I like to look at what the experts have to say and not all of the hype and drama on YouTube. So today we're going to talk about the California Association of Realtors, National Association of Realtors, and Redfin.com as well as Realtor.com to find out what is really going on in the housing market. With mortgage rates steadily coming down after reaching a peak in mid-June, the market began to show some signs of stability as purchase mortgage applications remained unchanged. So let's say that again. This is from the California Association of Realtors. Stability, not crash. Number one thing to hear. Home sales remained depressed from the prior year, which was a pandemic. So let's remember that was a strange time. However, there is some concern as economic uncertainty and higher borrowing costs continue to expand the role in home buyers' decisions to purchase. So mortgage rates have gone up. It costs more to buy a house. It is more challenging, so maybe we're going to see less people purchasing. Inflation is high and the economy is expected to pull back. We're going to see the market to normalize. Again, there's that word, stability and normalize, further in the second half of 2022 with softer sales and moderate price growth. According to Freddie Mac's primary mortgage survey, the weekly average 30-year fixed rate mortgage as of June 30th came down a little bit to 5.70 from 5.81 in the week prior. So yes, we had this huge run up and it's come down a little bit. The decline in these mortgage rates in recent weeks has boosted mortgage application volume up for the week ending in June by 0.7%. So guys, the idea that we're gonna ever see rates in the 3% in the next 5 to 10 years is gone. Be ready for 5%, 6% or higher. So if you are thinking about buying, you may not wanna miss out, okay? The refinance index ticked up 2% from the week before. Those really low refinance rates, not really here anymore. And our purchase applications, on the other hand, kind of were just flat. So we lost some home buyers, we gained some home buyers, but they were 24% lower than the same week a year ago. So during the pandemic, guys, we had so much frenzy and we're just slowing down. Overall purchase activity continued to be weakened by elevated rates and higher home prices, as well as some growing economic uncertainty about the R word, recession. Guys, there's no denying that increased mortgage rates is making home buying more difficult option for many home buyers. With this increase from last year's super low rates to today's rates, the average mortgage payment has gone up about $6,000 per year. So that's quite a big sticker shock. But the question is, are you going to get equity if you continue to purchase a home and make that dream happen? I know that home ownership is getting harder to reach, but it is still one of the number one American dreams. On the consumer index, the consumers were less positive about the state's housing market conditions in June than they were in the prior months. The results from the California Association of Realtors' latest monthly sentiment survey showed that 79% of consumer respondents believe that overall economic conditions in California will not improve in the next 12 months. The big R word is a big concern, recession, but I want to say when you look at recessions in the past 10 years, only one affected the housing market. So it's very possible just by looking at the past that the recession may not impact the housing market. We'll have to see. Only 14% of people surveyed think it's a good time to buy a house, which is a slight increase from the record low reached in May, but a sizable decline from last June's 19%. So let's talk about Realtor.com. According to Realtor.com, the housing markets are headed for a reset, not a crash, reset, stabilization, normalization, as we move into the second half of the year with rising supply blending with cooling demand. We're looking at the June inventory report shows that more homeowners are listing their properties for sale, which is boosting inventory for the second month in a row. Guys, this is good news because we were so tight. We're coming into the time where we're just not going to see $200,000 over asking and 4 million offers. And we're coming into a stabilization and normalization. Sellers, it is going to impact you. You have to price your home right. You have to actually prepare your house, and you're going to need to stage it and do great photography. With more new listings entered into the market in June compared to last year, though slightly down from May, newly listed homes were up 4.5% nationally compared to a year ago, and are up 3.1% for large metros over the past year. So we have been waiting for this. We've been waiting for this. We can't not have any houses to sell for that long. So sellers listed at roughly the same rate as 2017 to 2019 prior to the pandemic, up slightly by 1%. So it's basically normalizing back to pre-pandemic levels. Housing remains expensive and fast-paced though, guys. A median asking price at a new high, while time on the market is up just 1 day from last month's record. We'll have to see the June numbers and how they come out. The June national median listing price for active listings was $450 here in California. In San Diego, we've hit well over the 1 million mark in North County and pretty close to the 900,000 in all of the county. We're up 16.9%, guys, compared to last year and 31% compared to June 2020. Large metro areas are 13.3%. So just think about this. In the last year, we're up 9.9% in San Diego County. So no, it's not the 25% we had the year before, but that doesn't mean a crash. That means normalization. Overall, what we're seeing is more of a correction to a normal market. Home prices still increased 9.9% year over year. We are just coming out of this pre-pandemic or pandemic crazy housing market. Remember that the average normal gain for housing equity is only 3 to 5%. The biggest thing, home buyers, is to make sure you're comfortable with your monthly payments when you're buying a home. Being upside down on a home is no fun. I have been there. But with a steady and price increase annually, home buying can still be a great investment. Guys, check out my video on how to come up with your monthly budget, and you'll get a free download with that as well. Sellers, pricing your home is crucial to getting your home to move quickly. We have seen a little bit of a contraction in the market, and the move-in ready houses are going to be the ones that sell. It's very important to stop looking at what homes sold for before and look at what's currently on the market that's competing with your listing. Multiple offers, like 10 offers, is done. Staging and making sure your home price is crucial to an easy sale. I have a ton of videos on my channels about how to sell your home in San Diego and all around the county. Guys, please remember to subscribe and follow me for more helpful information on California's housing market and how to buy and sell your home. Thank you so much for watching, and I'd love to hear your comments below.